If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. Good morning, everybody. Welcome back to another live stream. Wow. It is a crazy day in markets. I hope you guys are ready. We got a lot happening. Markets are moving. Couple things to go over. Obviously, this morning we have some economic data. We have some producer price index numbers, which are the follow-up to yesterday's consumer price index, or the CPI. Today, we'll get the PPI numbers in 10 minutes or so. We also are going to get the court rulings on the Trump administration's tariffs and whether or not the Supreme Court rules them as legal or not. If they are ruled, and it is looking more and more likely that they will be ruled against, the question is, what happens after that? And man, it's actually kind of hard. Let me ask you guys this. If tariffs get overruled in some capacity, is that good or bad for the stock market? I'll give you a hint. It's actually kind of hard. The reason I say it's hard is because in one capacity, you're like, hey, you know, the market sold off hard on tariffs. People were scared of tariffs. It's a disruption to global trade. And so if we take them away, that's positive, right? That's bullish for markets. But there's also a lot of money that has been collected. Now we've started to build this new system with a more balanced trade approach. That's the goal, at least. If you take that off, what happens next? Well, one thing that almost certainly happens next, and why I think gold is going up and silver are going up, and why they just keep going up, there's a lot of uncertainty. There's a lot of people who are like, okay, this is chaotic, because the Trump administration is going to be like, all right, fine. If you're going to do that, then I'm going to do this. And he's going to introduce new tariffs in other ways that are more legally sound. So I think one of the easy takeaways is there's a lot of uncertainty here. We don't know what comes after the ruling if it is against the tariffs. So gold is not waiting around to see. Gold is making a move, right? That's how markets work. Markets are pretty smart. They're like, okay, yeah, whatever happens, it's going to be chaotic. Yeah, the Supreme Court is ruling as to whether or not the tariffs put in by the White House are legal or illegal. And so if they get ruled illegal, then there's like this whole like, okay, we got to command undo a lot of what just happened with all the tariff stuff. And the question starts to become real quick. All right, where's that money going? All right, how are we going to redistribute? How are we going to do refunds on all this stuff? Chaotic, right? And then it's also like, okay, well, you know, does that make it so that China can firm up even further, right? If we're overruling our own tariffs, is China like, all right, cool, we got the upper hand? There's just so much Game of Thrones here at the same time. So I don't know, it's difficult. And, you know, we see the stock market responding here kind of negatively to the rumor, right? The rumor right now is tariffs are going to get overruled in some capacity, and we're going to enter into another, you know, we've been in a pretty low vol environment. Volatility here has been pretty quiet since April of last year, right? And now, could you see an environment in which if the tariffs get overruled, if you know, the Trump administration keeps going back at it with the Fed, could we see volatility break out? And what does that mean to markets? Well, it probably means, in my opinion, probably means gold's higher, probably means stocks are lower. And so I'm not making these bets. I'm not short the stock market. In fact, I would love if we got some volatility, because I'd probably buy the dip. Well, actually, I almost certainly would buy the dip on some specific areas that I've been wanting to buy longer term stocks in. If you've been watching me for a while, thank you for watching me. And I hope that my content is helpful to you. But if you've watched for a while, you know, in April, you know, that was a rare instance in which I was actually able to buy stocks again. It was like, I love buying stocks, but I don't like buying them unless there's some blood in the streets. It's like the simplest age-old thing. But we've actually studied this, right? Really simply, like technical scanners, scenario back tests. What most people do, what most people do is that when the market drops like crazy, they get really bearish. They get really scared and they sell their stocks. It's like the simplest thing in the world. But actually, what we see here is that, is it streak studies? Yeah. Look at this, right? This is so simple, but look at the forward-looking returns in these two scenarios. Keep it simple. If the last 12-month returns, the stock market has been down by 20%. This is SP500, by the way. This is the study we're showing. In that instance, looking 12 months further out, the forward-looking returns are pretty average, on average, pretty phenomenal, okay? Whereas if the stock market's up over the last 12 months by 20+%, the forward-looking returns are not very good. This is, of course, on average, looking at historical data that does not guarantee anything. It's just showing you, in a very broad sense, when the stock market has been up a lot, the forward-looking returns are a little less attractive. When the stock market has been down a lot, historically speaking, the returns have been pretty good looking forward. Now, there's some assumptions in there. There's assumptions that the stock market's going to keep overall going up in the next 5-10 years, which I think is a pretty good bet. Over the long stretch, I think the stock market should keep going up. But in the short run, you know, we've had a really good run. And I've said this over and over. Chris Pulver and I have talked about this 100,000 times. You know, cautious optimism also sometimes means waiting for dips, keeping some cash on the sidelines. And that's where I'm at with the stock market right now. Now, I should say I am long the Russell. This is a trade that I've got on. I loved this setup. It was a beautiful retest of this 38.2% retracement. Support ended up holding really, really well. And I've now got my stop loss trailed into profit here. So at this point, it's very, very unlikely I'm going to lose any money on this trade. It's a question of how much money will the market let me take, right? So if we can keep pushing higher here, I'm all for it. I'll keep trailing the stop loss and continue to kind of follow price with it. Nick, what do you expect PPI? So I don't really make predictions on what I think the producer price index number is going to be. However, I do trade based on what it comes out as. So I'm a trend follower. I'm a macro trend follower. I don't try and make grand predictions in the short term. In the long term, I'm a little bit more open to predictions. Like I think cybersecurity over the long term, I think it's going to be a really strong area to keep my money invested in. That I can feel a little bit more confident about making a long-term prediction. But when it comes to trading, I'm very reactive. So instead of trying to predict what the PPI is going to be, instead, I'm going to react to the number and I'm going to add it into my bias, and not manually, but automatically. So if I look at the Edge Finder, we take a look at gold here. The last PPI number came in 2.7% year over year. This was in line with forecasts. There was no surprise. And so the impact on gold was neutral. If you're a gold trader, what you're looking at here is the new asset scan scorecard. And what this does is it scans a bunch of data and it gives us a summary right here. Also, I don't know how to ask you guys for feedback on this through a comment section, but I may do another survey pretty soon. I'm thinking about adding the full score here. So keeping the summary. I like these summary bits, but I'm thinking about adding another section right below it and maybe just moving the scorecard down a little bit, or the score over time, just listing every single one of these and the score impact. I feel like that might be nice. I mean, this is the scorecard overall, so the purpose is to show score and what Edgefinder is finding. Give me the conclusion. I just want to punch in gold, and I want to see what Edgefinder and economic data, technicals, COT reports, sentiment. I want to see what the data is telling me directionally is more likely, at least based on Edgefinder's findings, right? So we have 3 minutes to go here. What I'm doing is I'm just looking at gold. So if we were to see PPI today come in higher than forecasts, if that happens, then that would be negative for gold. If PPI comes in lower than expected, giving the Fed more leniency to potentially cut interest rates in coming months, that would give me more of a bullish reading. Now, overall, the general synopsis on Edgefinder for gold is bullish, has been bullish for some time. You can see Edgefinder score over time remains bullish for a while. And I've said this, I sound like a broken record, but I'm just trailing stops on this. Gold has been a really nice runner. It's up again, another 1%. This thing is ridiculous. Gold and silver are ridiculous right now. And all I can say is I closed out too early on some of my silver stuff. I wish I had bought more silver when it was lower. You know, I'm feeling FOMO like everyone else on silver. But what can I do about it? Nothing. You can just wait. That's it. I can't short this. I can't chase this long. I have to wait for dips. And that is it. That is all I can do. Now, if you're longer term, pull out your moving averages. I'm sure we'll talk about this with Chris Pulver in just a second. He'll be joining the stream after our number drops. But when we look at, you know, gold and silver, they're very, very stretched. Like, there's no question this looks like a broken chart. It's going to have a violent pullback. Just no one knows where it's going to be. And if you've listened carefully on the streams for a while, that's exactly what we've been saying. You don't try and call the top on this. You don't try and say, hey, you know, it's too far. It's got to come down right now. You just wait. You just wait for it to pull back. And if you're bearish, you wait for lower lows and lower highs. But trying to predict where this silver trend is going to end, you are standing amongst a battlefield of fallen soldiers right now if you are a bear on precious metals. That's all I'm going to say. With that said, we've got our producer price index number coming out. So let me just switch over so we can watch the data drop here. Keep an eye on all of our main charts. Got about 5 seconds to go. Let's see what the producer price index data comes in at. All right. Data should be dropping in just a second. Initial reaction here, dollar mixed, no large number of moves. Looks like we're probably getting a number that is pretty in line with expectations. Let me look at Forex Factory is annoying for this. It doesn't show you year over year, which is what I want to look at. Year over year economic data for producer price index. So where are we at? Producer price index year over year, 3%. Okay. And I guess we don't have consensus here. We didn't have forecasts. The month over month number came in at 0.2%. Did Forex Factory have consensus on this? It did, 0.2. So came in line with expectations. Retail sales also came in slightly better than expected. Core retail sales better than expected. Core PPI a little lower than expected. So bit of cooling inflation. Retail sales slightly better than expected. Current account also came out. Difference in value between imported and exported goods, services, income flows, etc. So interesting stuff there. Let's see what we had in terms of market reaction. S&P 500 mixed, no real response to it. Dollar index mixed. Gold not too significant. Silver coming down just a little bit in response to that. But overall, I would say what was kind of key here, retail sales beat pretty nicely. At the same time, yeah, both core and headline retail sales were strong and inflation was cool. So I would say that that actually is not too bad of a read in terms of risk on assets, inflation cooling a bit, although it doesn't really matter right now to the markets because everyone is sort of obsessed with what is coming around the corner with the Supreme Court ruling. With that said, we'll bring in Chris Pulver to the conversation, see what he has to say about everything this morning. Of course, you guys know and love him. He'll be joining me here on screen in just a second. What's going on, Chris?
Good morning. Happy Wednesday.
Good morning. Hey, so we just had the producer price index number and retail sales number. Pretty Goldilocks, I would say, in terms of retail sales looks good. At the same time, you have, inflation kind of in line with what we saw yesterday with CPI. But Chris, today is all kind of about the Supreme Court ruling. Is that fair to say?
Yeah, unless it's going to be like last Friday when nothing happens.
Right. Which it seems like that's the new trend, right? Oh, the White House is, attacking Powell again, and everyone doesn't care, it seems.
Yeah. We also just saw some PPI revisions. So I'm looking at the Bloomberg economic calendar and I don't see a forecast for this week, but the year-over-year previous was revised from 2.6 up to 2.9. The actual came in at 3% for this go. Okay. The year-over-year PPI previous was 2.7, came in revised at 3%, and then we just printed 3%. So again, I mean, if you're seeing any reaction on your side, I'm really not. Futures are down this morning slightly. Yeah, actually, they're getting a little bit worse. They were like 0.32, 0.33, now they're 0.39. And I, was not surprised at all that you're talking about silver this morning because that is one of the hot commodities. If I have my screen here, I'm not calling the top in silver, but I'm just doing a technical measured move. You take this is back to 1980, by the way, 1980, all the way up to that historical high. And then we redid the same thing from, 05 to 2011. Just take this move. Just going to clone that box and measure symmetry. I'm not saying this is the top, and I certainly don't want to short it, but I am expecting a chart that looks kind of like this on a weekly time frame, kind of like even probably more ridiculous on a monthly time frame. Yeah. I mean, other than a pause, which now these looks just like tiny little pauses and hiccups, when it's really this is a 10 to 15% correction. This was a 15% correction, and it doesn't matter. So it was my measured move. So 91 was my measured move. I said if this thing overshoots, I mean, we could obviously go after a round number like 100. But I certainly do not feel comfortable chasing these highs right now. And like you just said, you nailed it. Just wait. Just wait for a pullback. We're going to get a pullback. We're going to see a topping pattern. Typically, commodities kind of top out and then, crash hard. We've seen it here. That was our correction. Look, there's plenty of support down below. Even if I can, and I don't have a fib yet, but I'm trying. I will get a fib going off of a high that looks a little bit more reliable. And then we just start looking left on the chart and see, okay, do we pull back to a, 30 to 38% level? Do we pull back 50%? And then I'd start looking to reposition myself in silver. Gold could be the same thing. I talked about the gold pullback to the 200-day moving average. So if and when that happens, silver is probably going to be 2 to 3 times as volatile. So that's still on my radar for the next 60 days.
Chris, we've got, in terms of silver, we are talking about, obviously, if we could show my screen, I've got recent volatility getting high readings. Obviously, 4.8% average daily moves that's just nonsense. Yep. Like, we're talking about something where it used to be a big day if silver and gold made a 1% move, 1.5% move. And now you're talking about over the last 90 days, getting like 3.8% average volatility. Should come as no surprise. It's above all of the moving averages. I mean, momentum here is clear, but I do also want to reiterate that I am a momentum trader, but momentum trading, there's within every type of trader, there's many different sects. I'm not the type of person to say like, okay, it's straight up and that just means buy. It's sort of like, okay, momentum is changing to the upside. I kind of want to still be early to that shift in momentum. And I do feel that, this just feels gut level that this is not going to keep going at this pace for much longer. However, I don't trade based just off my gut, so I wouldn't go short on silver just like we've just got done discussing.
Right.
I think that I don't know what it's going to be. We talked about that the other day, but we often find ourselves in this, like when a chart just looks broken, it's just, You don't know what's going to change it. You don't know what's going to suddenly change the appetite. But a good example of something like this that I'm remembering from last year was Google. Remember, Chris, when Google was like the dog of the Mag 7 and everyone hated on this thing. And they were saying
Right.
it was just a terrible, terrible stock. And, it's going to get completely disrupted. They're behind on AI. And then it just went into hyperdrive and just shot off and continued into now. And so, you get these weird phenomenons where, sentiment can just become so extreme for a suspended period of time. And so, silver, I think, is playing out in a way where for a long time it was very hated, very underappreciated. I mean, for a long time, Chris, you came on every time we talked about precious metals saying,
Mhm.
I think silver's the better buy. And,
Yeah.
it definitely was. And at that time, no one agreed with you, right? I mean, I kind of agreed with you, but it's just interesting how that extreme sentiment can go on for a very long time. And now I feel that it's the opposite extreme.
Yeah, and look, this is a good example of how difficult it can be to hang on to your winners. That I mean, having a 15% correction will shake out a lot of loose hands. It'll shake out a lot of stop losses.
Yep.
Dollar cost averaging back in, which is what I did. I mean, I was in silver and pretty committed to a 3-year campaign trade on it, and it did really well for me.
Yeah.
And yet I'm still, I guess on silver I shortchanged myself by about 90%.
Well,
Which
if it makes you
gold
feel
is
any
like
better,
maybe 5% on gold, but yeah, being off the highs by 70-80% feels a little crappy. But I did get in on that first. Anyway, gold versus silver ratio.
mhm,
We are just it's a falling knife, which I think is great. Look, they could both still perform really well, but look, I'm just trying to make some sense of stuff. It's like, don't call the top on silver. Wait for some levels to pull back. We'll be talking about the stuff every single day. But if we get this historical average around 40 to 50, we're trading at 50 on the nose right now, 50.58. And look left when this thing first kind of popped up with data in '06. There's a couple of strong support levels here, and then an extreme down here in 2011, which actually was a historical high on silver at the time. So if we do push into that, like, let's say 47, 45 zone, or all the way down into like 35 zone, I think that's a good time to like peel off some silver profits, start parking it in gold, get some dollar cost average levels to get ready for some pullbacks. And again, it's just, I'm hoping that we can be patient. I do know this: silver is not going to be the one chart of every chart you've ever looked at in the history of trading that will never pull back. Silver
sure.
will pull back. So
Yep.
it's going to happen, and don't be surprised if it's 30, 40, 50%. But it's a fun run, and it's really exciting, and it's catching everyone's attention. What could be very disruptive this year is watching gold pull back 20%, watching silver pull back 30 to 40%. That could be, it's not going to be fun for a lot of people that are buying these highs and chasing these rips, but it's going to be hopefully rewarding at least people that are wanting to participate in some way, shape, or form versus just I mean, you talk about catching a falling knife. This is just like jumping on the tip of a rocket and hoping that it can keep going higher to to the moon and beyond.
Yeah. Chris, I've got a chart of the day for us to discuss. It's Chinese stocks.
Okay.
Interesting little conversation to have around this. So obviously on the same day that we're talking about tariffs getting potentially pushed back on and maybe that dynamic changes, the question is, does that in any way positively affect China? But then also, are Chinese stocks just, I mean, look at the way price is kind of consolidating here. You've got price coming back up to the top end of this range. Could we potentially see a little bit more emerging market kind of rally that we saw in 2025 continue? And personally, I think that there could still kind of be this continued exodus of the dollar that's been going on over the last, we've seen it over the last, year and a half, 2 years.
Right.
It's a clear trend that people, big banks or central banks are moving into precious metals. And with that, that's kind of a drag on the US dollar. If that is kind of a theme that stays in place, that could maybe lean into some of our previous conversations around international stocks, Chinese stocks, Brazilian stocks, South American stocks. We talked about that. Doesn't necessarily have to be China, but what are your thoughts on that trade 2026? I'll say, just give my 2 cents before putting you on the spot. I think it's actually a pretty decent year, in my personal opinion, to actually look for dips on international stocks. I'd personally like to be buying some INDA, the Indian stock ETF. I'd like to buy some EWZ if it gave me a pullback. I'd be interested in Chinese stocks. Just spreading myself out a little bit here in terms of if I think we're going to potentially have a weaker dollar for a little while, maybe international stocks are a place where we could maybe branch out and diversify a bit. What do you think?
No, I agree. I was, kind of pounding the pavement on at least having some exposure to international last year, and a lot of it, to me, it's the simple fiscal dominance that's happening by the whole world now. Like it was the U.S. just been running these hot deficits for the last decade plus, and we're spending money from the government level like it's a crisis, and we operate every year like, hey, we're just going to have a 6 to 8% deficit. Now, what's happening is, and I just think that this maybe started a little bit, at least caught government's attention during COVID, but certainly more likely the last year. Like a trade war, for example, is what really kind of cemented these programs getting put in place. So I don't know if it's going to be the end of the dollar that really is going to be the trade, but I think it's the fact that governments are looking to spend their own money to bring back their own currency. So like repatriating their currency, getting flows back in. I mean, global yields are rising. So, I do think there is that potential outlier of the Japanese yen carry trade unraveling this year, but don't use I will say this, don't use the 30-year. If you go JPY 30-year, this is not, even though this has been going higher, this is like an outdated yield, but it's the 10-year that's been catching everyone's attention as far as like, is this going to be the unraveling of the carry trade, the 10-year yield? Look, our 10-year yield is not that much greater than this. I think our 10 years at 4 and change. We're over 2% now in the Japanese yen, and it wasn't that long ago. I mean, let's go back to the monthly. I mean, in this was literally negative rates during 2019, 2020, and it's just been nonstop ever since. So, I mean, part of me is like, man, what a great trade that would have been just to get long Japanese yen. You're up 1,000% if you're up like Japanese yen yields, right?
Yeah.
Difficult trade, but point is, if this is one of many countries that are trying to get money and flows back into their own system, and also the governments will be spending like the U.S. has been doing, a kind of this poster child of, hey, we can run these hot deficits, and we can have growth, and we can have international money come to us. Well, I just think countries are like, well, we can play the same game. We'll just have money come back to us, whether it's our own flows. And I don't think that's like a liquidity risk to the U.S. markets or anything like that. We obviously we highlight capitalism and profits over everything else. So we still have like the strongest, most liquid markets, but international is a good way to diversify. And part of that is also, it's not fair to say like, well, European stocks are undervalued or Chinese stocks are undervalued. They are relative to U.S. stocks, but they've also never been highly valued. They've never been overvalued. Like European stocks have always been kind of beat down. Chinese stocks have always been, do you really want to own China stocks long-term? You want to just kind of take some stabs at maybe like a 1-year cycle, 2-year cycle to see if you can time it. Because it's always that risk of, well, what if we have, it's just at this point, what if we have worse relations coming in the near future, where it's like we have more friction with Europe, more friction with China. It's going to make the markets tougher to trade.
Yeah.
So anyway, I just think that international is a great play. I wouldn't go, ham and all in. It's like I have typically, if I like something as far as like a campaign position, I'm good with like a 5% position that I can dollar cost average into. That's kind of my exposure for SCHY, EWZ, ILF. I'm trying to think what else I have international. I know I did some of the MIXI, like the MIXI non-US.
Yep.
So I've got like 4 or 5 positions that add up to be about 5%. And, if that just outperforms, that's fine. Remember, like that 5% is my total portfolio. I'm still sitting at about 60% cash. So I'm still like dipping my toes in a lot of things right now, but international certainly is going to get some love from me this year. So
another thing, just because you talked about the 10-year yield, I pulled up another chart for us to discuss. This is very interesting because this is the 10-year yield, as you've discussed in the candlesticks, crossed against the JPY USD. So it's USD JPY inverted.
All right.
And this is truly concerning, because what we can see here is a breakaway where typically, guys, think about this, right? Most people will know that if the interest rates go up, then the currency should also generally go up, right? That's the oversimplified idea. When you have interest rates, like if the US started hiking interest rates, people would expect, like in 2022, for the dollar to go higher, right? Well, here's what's happening in Japan. The Bank of Japan is potentially talking about, or they have talked about, hiking interest rates, and yet the currency is going down, and it has been going down for months. And so what's interesting is that as this has accelerated, where rates or the 10-year yield has been skyrocketing in Japan, the currency has been getting hit hard.
I know.
And what's really concerning about that, and I had to do some research. I think we talked about this once before, Chris, but I had to do some research on understanding bond markets a little bit better to understand how to define what this is actually telling us. And what it is telling us, point blank, is the market thinks that the Bank of Japan is way behind and they should have hiked rates much sooner than they did.
Right.
And essentially, this is saying, hey, we are thinking you're going to keep seeing economic decline and inflation, and you have an aging population, you have trouble, and yet you're not hiking rates fast enough. And so people are wanting to just liquidate any yen exposure they have, as they see it as a very fast depreciating currency. And if you're going to lend money to Japan, people are demanding more in premium to account for the higher inflation, the currency devaluation. And so essentially what the bond market is saying is, we think that the Bank of Japan has missed it, that they are too far behind and they should be hiking faster, and they're not. And so that's where you have this big question mark. And, someone might get this right, Chris. There may be a huge intervention play where they just, they get aggressive all of a sudden.
Yeah.
And if that happens,
major consequences if it does, though.
Major consequences, right? Because it could send the yen much higher at the cost of potentially disrupting the global system, right?
Sure. Yeah. And so part of me has talked myself out of averaging back into FXY. I already have an exposure on this one when this thing tested in 2024. I am long FXY around 59 bucks.
Okay.
So, we had this recent run up to 65. I've measured this as, if this is going to be support and we end up, let's say this level holds and we go all the way back up to 65. Well, if that is a double bottom, if this is a low, we come back to this level, we break the center high, I measure the move. My goal is I'm going to hang on to my ownership of FXY. My target 1 is back to the top, and my target 2 is a full, double bottom measure move. Now, that's like a 20+% appreciation in this asset. Now, is that 20% across the board on JPY strength? I don't know, man. I mean, I don't know where that takes that probably takes the dollar yen from 160 back to 120. You and I both know that if we see some currency moves like that, we are in for some massive risk off trading and some insane volatility this year if it happens. So I don't know. Again, like, it is such a perplexing economy and such a difficult, currency situation to see. Well, the chart looks good, but at the same time, Nick, would you be terribly surprised to see the Japanese yen go, like, say, dollar yen goes to 200 versus 160? It's like, it doesn't have to stop at 160, 161, 162. It's like those have been, intervened tops, but it's like historically we've been to 200. It could go to 200, and the debt to GDP is 200+%. It's like, I don't know how Japan even operates the way that they do, but they do.
Well, if Japan comes to a point where they say enough is enough, we got to choose Tokyo before we choose the rest of the world.
Yeah.
Then you could get some real yen strength come back into the picture. But it seems like they're very poised to not rock the boat in terms of globally. So no, I wouldn't be surprised if the dollar yen continued to push higher and
especially
higher.
From a liquidity sense, if everyone is starting to dollar cost average into topping out the dollar yen, right? It's like, what better liquidity grab than looking at all these built positions trying to stop out right around that 160 handle, and we're pressing right up against it, and we have this top here at once. I mean, do you know how many stop losses are sitting above 162?
Yeah,
tons. So it's like all it has to do is grab that, and if there's nobody that's going to re-enter shorts, like, we could just drift higher. So until I see a topping pattern that I'm willing to take a swing trade on, I was long here. I was long yen for alerts, and that paid out well. That was like a 2-to-1. We nailed a little trade on Swiss yen as well for, like, I think 90 or 100 pips. So I've been taking some little, like, 15 to 30 minute structure swing trades. But as far as the big picture, like, I've said this for years. I hate dollar cost averaging to the yen. Like I will trade it for confirmed. Here's my stop. Here's my reward type thing. Try to go for 1.5 to 1, 2 to 1. But until I see a really obvious trade that I would say, okay, I'm going to swing trade this. Still want to have a stop loss. Still want to have a plan. I don't think there's any reason to fight this. You can go across the basket here on the Japanese yen. It's like everything is higher and higher and still higher. The Swiss yen is still at all-time highs, hasn't come back even close. Euro yen still highs. Pound yen has gone all the way back above that. It's like these are major levels, and the pound yen is 500 pips above it. So do not feel confident whatsoever trying to call a top when this is one currency pair that just doesn't respect them. So just be careful. That's all. That's always what I say on the Japanese yen. Be careful.
Yeah, and it's I think that it's a tricky one, because when we're looking at Japanese economic data, for example, GDP growth is still very down, right? So hiking interest rates, maybe that's a bit of a limitation, as they have, hey, if we hike interest rates, it could hurt that or keep that from growing. At GDP growth is not super impressive there, although that they are still sticking with or seeing above their longer term average of inflation at 2.9%. So we'll see how that all shakes up. But I do think that is a story brewing under the surface that we don't really know when all that comes to roost. But it is a huge story, as the Bank of Japan is sort of the global piggy bank in terms of liquidity. A lot of money goes from borrowing yen at low interest rates and expending it across the global financial system. So
do you think, Nick, that there will be, you've heard the phrase T-bill and chill. Do you think there's going to be something along those lines, that the Japanese yen gets offers enough yield that the world's going to be like, well, we'll just park it, because here's a lot of liquidity that the globe has seen with a carry type trade, and it's like, well, we'll just throw it in the Bank of Japan, or all the money that's out in yen is going to come back and just sit at 2.5% or 3%.
I see that more likely. Yeah, I see the case becoming stronger. If valuations keep getting richer, at some point there's this normal risk reward starts to be like, okay, you know what? Let's just leverage a bit here. Let's get back into, we're actually getting some yield out of, if this goes up to 2.5%, that might be a breaking point for a lot of people to be like, hey, you know what? Sell some crypto, sell some stocks, sell some, international bonds, just, come back a little bit to the Japanese yen, and buy some, Japanese bonds. But tough to say where that is. This chart, again, just keeps trending higher, and it definitely is worrisome for the yen for now.
Yeah, I think within 0.5%, because of the currency swaps and exchanges. I think if the 10-year for us is, let's say we push the 10-year down sub 4%, Japanese yen climbs over 3%, maybe gets within 1% or half of 1%. I just think that at some point, like certainly if we cross over, that just eliminates the carry trade altogether. But I would not be surprised if this starts to show up if we're like within half of 1% or 1% of each other from the 10-year mix.
Right. Yeah.
So VIX this morning, I just want to point out, I was looking at this chart. VIX is quite a bit elevated, over 17 plus. We have some gamma this morning, looking for like a 0.4% lower futures. So we're gonna see a little bit of a dip today. Live market, 69.25 on the SPX, maybe 6,900, some pretty big levels. If we hold for the week, we open up around 69.34 to start the week. So I'm thinking that if we dip below like 69.25, 6,900, hopefully we can pop back up here. We're going into a holiday weekend as well. A lot of this too could be the Supreme Court, noise today. If that comes out officially, I don't have a timeline on this. You have any timeline when the Supreme Court is going to say anything? Is it during market hours? Is it after market hours?
I think it's 10 a.m.
10 a.m. Okay.
10 a.m.
It's not on the calendar anywhere, right? There's nothing on the calendar.
No, but I've just seen a bunch of tweets and posts about 10 a.m. being.
All right.
So we'll see.
All right, we'll see. I mean, last Friday was a wait and see, and nothing happened. So I think they just commented on something that wasn't related to whether it's unconstitutional or not. What are the betting? Who's got an active betting market?
Got about a 28% chance that they rule in favor of the tariffs. So it's very likely.
It's still low probability then.
Yeah, very low probability that they're going to be like, all right, yeah, we're all good. It's most likely going to be some pushback on it. And so, Chris, I started out the stream today with this. Hard to say for me if this is bullish or bearish if you get them, ruled as illegal, right? Because there's so much that comes after that. And I think that the default of the market is uncertainty, right? VIX up, gold up, get out of the way. We don't know, this could cause big moves. But then the question is, when you get tariffs, potentially you get the refunds start happening. You also get the retaliation from the White House. Clearly, there will be some angry
For
texts or
sure.
some
Yeah.
tweets, and then the question becomes, what's the next action
Fire
from
the
the
Supreme
White
Court.
House?
Fire the Supreme
Right?
Court.
Right. Let's just replace the Supreme Court. They'll get you and I in there, Chris. We'll just, run the ship. And then, so we have like all these different question marks that immediately come up. But then there's also the question, that's where I went to China earlier. It's like, well, what does this do for tariffs? Is this kind of like backlog tariffs for a while? Do we put a pause on this? Is that good for China? Is that good for international? Does that hurt U.S. economy? We have started to see some income from tariffs coming in. What happens when you reverse some of that? So there's just so much that is loaded in there. I've talked to you about this before, the Tom Lee statement of, well, hey, if there's back push or pushback on these tariffs, does that not kind of give the market the idea that, okay, there is a ceiling to what the White House can get away with on tariffs, that
Sure.
they can only go so far? And isn't that bullish for the market? So there's so much here. I really could not tell you. And I really just don't know exactly where that's going to send the markets if they get overruled and we start to see a bit of a fallout between, the White House and the Supreme Court. I don't know. We'll see.
Yeah. And, and companies are threatening, they're trying to sue the U.S. right now as well. So, if the Supreme Court rules that they kind of take away some of the power this is unconstitutional, we're treating it like a tax, it needs to go through the proper chain of command. I do think the market takes it as like it's a bottleneck that's been relieved. It just makes the deficit widen a little bit because we're claiming we're making $500 billion on tariffs and we're really not. But to my knowledge, there's 3, 4, 5 other points that Scott Besson has talked about where we can make it up elsewhere. So whatever that looks like, I think it's going to be noise. And honestly, just make that like the secret word for all of 2026 is how much noise do we have to get through? How much noise actually sticks to the market? We're ultimately going month to month. Part of me, Nick, is really just I'm going to trade super conservative for the foreseeable like 30 to 60 days and see like, okay, we have like the holiday flows. This expiration kind of gets us through that window. Once we get into like late January into possibly like February, March, we've had those like scary little cycles where February, March, April tends to have like any type of weakness. The market likes to get it over with in that window. So I think that's where we're probably the most vulnerable for this early part of the year. I would rather see the weakness window be now than late in the year. It's no fun when the market's at all-time highs in December and watch the market drop 10, 15% to end the year.
Sure.
So I think going into, how this year could play out, and again, this is just my ask for the market. It's like we could be forming what looks to be a bit of a rising wedge here. We could maybe have some news that gets us to highs. My least favorite trade, and I just think this is because it's the most challenging, is if we blow the lid off of 7,000 and we just keep going up aggressively. Yes, participation, having some ownership already, enjoying that run is great. But I don't like the idea that especially inefficiently, will likely yield once a correction starts to take place. It'll backfill and it'll be like a pretty nasty correction. So I think that the easier trade is we just kind of chop around in here for a while, right? We get 7,000, we celebrate the milestone, but the market can't really make a big break above it. We pull back, we find strong support, and we dance around in here for a while. That to me is like a normal market to see, okay, if we do get above these highs, then we can justify those highs. But if we just blow the top off, I'm like, here we are at high valuations, going higher, going inefficient. I don't know. I just feel like that maybe brings me to say like, okay, gold's at all-time highs, silver all-time highs, market's blowing through the top. That's an everything bubble to me.
I got to say, this environment right now is, in my opinion, the worst environment as an investor. My personal opinion, I don't
trader.
like
Yes, be a trader.
Trading.
Investors,
I've been trading, pretty much exclusively. Anyways, last point I wanted to share with everyone here before we get out of here, we gotta hop off and pass the show over. Seasonality, just to your point about, maybe we get it out of the way here in the first half of the year. Yep. Last year, we saw that between February, March, and April. We saw some real strong down moves in the market. That was kind of in line with seasonal patterns where you do typically, over the last 10 years, you've typically seen softness in the market in that February, March, and April window, and also in the August, September, and a little bit in October as well. So maybe we will get a little bit of bout of volatility here before the midterms. May give us a little bit of an opportunity to step in and buy some stuff at cheaper prices, or at the very least see this market kind of cool off for now. Anyways, guys, yeah, we are out of time here. Chris has got to go. I got to go. We'll pass over the stream to Marco. Don't go anywhere. The show is going to continue. Before we head out, if you want to get access to the trade alerts being shared by myself or Chris, simply head over to our website, a1trading.com. You can explore the pulver alerts there or get access to the trade alerts from our VIP group. If you have any questions about that, if you want some more information, the easiest way to do that would be to speak directly to a member of our support staff. Click here to send a direct message to a member of our support staff. They're in the chat right there. And with that said, guys, thanks, Chris, for coming on. And up next, you guys got Marco. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. I hope everyone is doing well. So we got some news out of the United States. We got the PPI, so core PPI, core retail sales, PPI month on month, retail sales month on month. If we go to the DXY, let's take a look at the reaction. So it happened on like 1 hour ago. Essentially, the reaction is kind of muted. In my opinion, we came in pretty much right on the dot as far as the forecast goes. Maybe a bit different for this one, but I would say the reaction is definitely minimal. So nothing drastic to see here. Now, as far as my AUD USD position goes, or the position that I had, fortunately I got out of this one. So let's just jump on to Oanda data. So now I'm out of this position. Of course, there was a signal in the A1 trading Discord to close the position. And looks like there's going to be a bit of a pullback. So it looks like the dollar has started to gain some strength. So we are back at the 20 MA. Now, I would consider possibly re-entering my long at some lower levels because I still like the Aussie. I still believe the Aussie is a pretty bullish currency going into 2026. So we're going to have to see what happens. But at the moment, I don't want to buy at this level. The most important currency pair for me right now is USD JPY. So USD JPY, this is a new this is a new signal in the A1 trading Discord. And I'm betting on a possible intervention from the BOJ. We are now in the critical, absolutely critical area. 158 to 162. That's a critical area. They already had an intervention in, let's say, July 2024. Look what happened after it. There's already been some talk about a possible intervention. For example, if we go to market moving and we scroll a bit lower, you're going to notice, let's see, Japan's finance minister Katayama, we have a free hand to take bold action on the yen. Okay, so that's what you want to see for a possible intervention. I'm betting on that. I think we got into some key levels. Unfortunately, my position has not been tagged in, so I'm still not in this trade. I'm keeping the sell limit on. So I'm keeping the order on. But essentially, the game plan is we go into the critical area. I get taken into my position. we have an intervention and the price drops, how much? Around 3 to 4%. So if you backtest past interventions, past BOJ interventions, you would notice, let's do it with the tool. You would notice that they usually make the markets drop, or they make USD JPY drop around 3 to 4%. So that should be your target, and that is my main target at the moment. Again, the target is subject to change, but at the moment, I'm targeting 164.610. One more thing that's important to note, this trade, if I do get taken in, is going to be expensive in terms of the swaps. So selling USD JPY is a pretty expensive proposition. You can find that information if you go, for example, to the let me just see. It has been moved recently, so I'm going to have to see where it is. Carry trade scanner. So if you have the edge finder, you go to fundamental analysis and you go to the carry trade scanner. You type in USD JPY and you can see that the interest rate divergence is pretty large. And the real interest rate divergence, so the real rates, which means, let me show you, so real yield heat map. The real yield is the interest rate minus the CPI. So that is what actually matters for currencies. But the carry trade scanner is telling you that selling USD JPY is a pretty expensive proposition. On your broker, most likely you will need to pay some pretty expensive swaps. So the swaps will be pretty high. That means I don't want to really hold this position for too long. So I do want to hold it for, let's say, a couple of days, maybe 1 to 2 weeks. I think that's kind of the maximum. And if nothing happens, or let's say I get taken in, I hold it for a couple of days, 1 to 2 weeks. That's about it. I'm going to most likely manually close it because, again, the swaps can eat me alive. Why is the stop loss so big? Maybe your next question. Well, we can go a lot higher. I mean, we can go to 163. That could happen. But the reason I believe, or the reason why I have the sell order here and not here, is because I believe that the price is going up in a very rapid manner. So the price is moving higher pretty fast. So the BOJ may be more inclined to act quickly to push the price lower rather than wait the exchange rate to hit, let's say, 162 or maybe even 163. Again, we're going to see what happens. But that is the general game plan. That is the trade structure. And now just letting it in, putting it in the markets and seeing what happens. So that's my favorite thing. Let's also put a yellow flag. That's my favorite thing when it comes to Forex at the moment. By the way, in 5 minutes, I'll be giving away a free DNA-funded 10K one-phase account. So make sure you guys keep watching the stream because you may just win a free DNA-funded account. I have the Pound Aussie still. Pound Aussie is the best trade on the Edge Finder at the moment. So Pound Aussie, GBP AUD. Bearish reading. The UK is pretty weak. The latest data out of the UK is coming out pretty bearish. The Aussie is pretty strong. The latest data coming out is doing pretty well. The trend is down. Seasonality is not in our favor, but the rest of the numbers definitely are. So my favorite currency pair to sell concerning the Edge Finder, so not looking at interventions or anything crazy like that, my favorite currency is going to be the Pound Aussie. But what I'm looking for is I'm looking for a technical confirmation. So I'm looking for a breakout lower out of this support level. So break of support level, retest, and that is going to be good, okay? That is going to be enough for me to look for a nice sell setup. So that's what I'm waiting for on the Pound Aussie. And I do have gold. Now, gold seems to be running away without me. I can't buy the all-time highs. I can't buy right there. I have to wait for a pullback. It it's in my plan. So it's in my trade plan that I have to wait for a pullback. I have to get in close to the 20 MA. For example, the last time I got in was right here, again, around the 20 MA. I think that was a very, very good entry. Unfortunately, I got taken out before the price moved higher, but I'm looking for a similar thing. So I'm also considering this level of support. This was the previous all-time high. So if we can hit that level again and the 20 MA catches up, I think that could be a pretty nice opportunity as well. Okay, so that's my game plan for gold. A new feature on the Edge Finder, which I definitely want to show you, is the asset scorecard. So on the left side, you can find it on the top. And let's take a look at gold. So let's see what's happening with gold. Overall, there's a bullish reading with a score of 6. So these are all of the things that the Edge Finder looks at. Some interesting stuff is the US 2-year yield. Right now seems a bit more attractive than gold as an investment. So that gives gold a bearish reading. And we have some US data, NFP, unemployment rate, weekly claims, ADP, jolts. So you can see NFP missed. NFP was negative in terms of the forecast. The ADP was negative. Jolts were negative. So that's all bullish for gold, because if the jobs market is not doing well, if employment is bad, that creates more of a risk-off environment, and that makes gold go up. So in your Edge Finder, asset scorecard, you have all of the main assets right here, and you can take a look. What's happening with oil? Let's bring up oil. Oil is neutral, and we're not clearly getting a bullish or bearish bias. So we don't have anything interesting on oil happening at the moment in terms of the Edge Finder. Technical analysis, though, we have a massive breakout higher, not something that you want to see. Again, oil is a big contributor when it comes to inflation. So when oil prices go up, usually everything goes up, because all of the products in the world, they need to, or the ones that aren't digital, they need to be delivered. And how do you deliver products? Cars, planes, trucks, ships, they all run on oil, basically. So if oil prices go up, everything goes up. Why is this happening? Well, most likely because we had some drama with Iran recently. So US, Iran, creating some tensions, pushing the oil prices higher. One website that I love and is absolutely free is Financial Juice. Usually, if there's a move in the markets, there's going to be a post in the market moving section of Financial Juice. So if you look at the last thing on oil, Trump, when asked about help on the way to Iran, you're going to have to figure it out, which probably means rockets, planes, maybe like a special team that goes in, does some stuff, or maybe even boots on the ground, a whole invasion, which I don't think is going to happen, but looks like there's going to be a military move on Iran, which makes oil prices go up. Again, it creates uncertainty, tensions. Gold loves it. Gold is going higher as well. Let's bring it up. Again, gold loves it. Silver loves it. Risk-off environment. US stock market does not love this. So the US stock market seems to be pulling back a bit. But you have to know in which environment we are in. We are now in a bit of a risk-off environment. Risk on means stocks up, gold and silver usually down. But last year they've actually been going up. Risk off, stocks down, gold and silver massively shooting higher. So now time for the giveaway. Let me copy my code. I suggest you go to the DNA Funded website and you go to the checkout page. This is going to be a 10K one-phase account. So let's copy the code and I'm going to paste it in my trading view. And 3, 2, 1. This is it. Okay, that's the code. If you have managed to use the code, just put a comment in the comment section so that we know that the code has been used. If you want to get funded, if you want to expand your trading capital, so funding is one of the 3 main problems for retail traders. First problem is unrealistic expectations. Second problem is they don't have a trading edge. And third problem is that they don't have enough capital. So capital is a massive, massive issue. You can make 10, 15, 20, 25% per year, but if you're making, let's say 20% per year on a 10K account, it's only gonna be $2,000. That's kind of nothing. I mean, at least for European and US terms. For us, for some other countries, it may be a lot. With prop firms, you can expand that capital drastically. So you can get a 25K, 50K, 100K, 200K account. Mind you, you can only go into drawdown 10% into drawdown, but it's still worth it. You still get a lot more capital for that challenge fee. So if you're looking to get funded, DNA funded is absolutely the best option in my opinion. And we have a discount code, which is A1 Live. This is specifically for you guys watching the streams. A1 Live gets you 25% off. So 25% off any challenge on DNA. Okay. By the way, this is my personal 50K funded account. So past phase 1, past phase 2, now funded, and currently in drawdown, unfortunately. So minus 3.5K. I have 2 trades open, a buy on the SPX, a sell on Aussie dollar. Both trades running in profit. So we will see what happens. Goal is, of course, to get a payout. And these are the stats on the bottom. So daily loss, not breached, total loss, kind of close, trading days completed. Okay. And this is the code, 25% off A1 Live. Continuing with the program. So let me check if the code has been used. Don Malao won the account. Congrats. Awesome. So you were the fastest today. I have more codes. I have more challenges to give away. During my segment, I'll be giving 1 challenge per stream, basically. So you can find my schedule if you go to the A1 Trading website. So let's remove this. A1 Trading live stream schedule. So today I'm on at 9 a.m. Eastern Standard Time. Tomorrow I'm not streaming, but on Friday you can catch me at 10:15 Eastern Standard Time. Okay. And I do have quite a few more accounts to give away, so I highly urge you guys to join the streams. We covered gold. Silver, I don't want to touch. Silver just, in my opinion, still looks parabolic, still looks absolutely crazy, looks massively impulsive. I'm not the one to be catching the silver. So I much prefer gold. I'm looking for buy setups, but I'm focusing on gold in this risk-off environment. And again, this is a great environment to have some gold. And gold was actually doing pretty well in 2025 when we had the risk-on environment. So it looks like gold is just going higher no matter the environment. And gold and silver have been absolutely the best performers, the stars of the show when it comes to 2025. So that's for the metals. Forex, USD JPY, Pound Aussie, that's what I like the most at the moment. Stock market, US stock market, everything seems to be down. So everything seems to be pulling back, even the DAX, which went parabolic. I'm focusing on the NASDAQ and I'm looking at a triangle. So here's trend line. Here's another one. And I'm looking for a breakout out of the trend line, or I'm looking for a breakout out of this triangle. I personally believe it's going to be to the upside. So I personally believe it's going to be a bullish breakout, but I'm not looking to buy at this level. I'm not looking to buy at the moment. You may ask, why do you have a buy position on the SPX on your DNA fund account? That is because I'm using solely ChatGPT trading signals to trade this challenge. So these are not my signals. This is purely ChatGPT. And that is for a series that I'm doing on my YouTube channel. As far as the NASDAQ goes, as far as my personal trading, my personal signals, I need a breakout. So I need a breakout out of this triangle. Hopefully it's going to be to the upside. I need some momentum. There has been a clear rotation from so clear rotation from technology to healthcare, energy, mining, stuff like that. So that's why the S&P did pretty well and the Nasdaq started to lag behind. But I'm looking for a flip. I'm looking for us to go from risk off to risk on. I'm looking for a breakout higher. So yeah, the current risk off environment is definitely not helping the stock market. We need to flip back to risk on. So we need to see risk on, and then it's going to be game on to look for buy setups. So that's for the stock market. On the DAX, I think the DAX looks amazing. As far as the DAX go, I would like to see a pullback to the support level. And I would like to see a bullish reading on the edge finder. So as a nice confirmation to, of course, look for buy setups. This looks like a good level. It's around the 20 MA. That's the initial game plan. Now, if price kind of stagnates here and the 20 MA catches up, I think that's another good opportunity to get in. So the 20 MA does something like this. I think that's a good entry point. But of course, I would love to see the edge finder give me a bullish reading. I'm pretty sure that I won't go in unless we get a bullish bias right there. So that's my game plan on the DAX. The DAX definitely outperforming the US stock market, even the Nikkei. Nikkei has been on a rip, pausing a bit lately, but the DAX just looks great. Finally breaking out of the flat channel. Crypto, so okay, platinum, copper, moving higher, although I don't do much analysis on platinum or copper. I don't know much about them, so I tend to stay away from them as far as trading goes. Bitcoin and Ethereum, Bitcoin up today. We're approaching 100K. So we are definitely approaching that 100K mark. What could be the reason for this? I'm not sure. Could be some risk off play and then things go into Bitcoin. Maybe some rotation out of US stocks into Bitcoin. I'm not sure. But again, Bitcoin does these moves up, down, and there doesn't really need to be an explanation behind them. We still seem to be a bit stuck at this resistance level. So I'm still not 100% convinced that this is going to continue going higher. And I'm definitely not going to be looking for buy setups unless we break out of 100K. So 100K, clear psychological mark, clear support level. Here's the support level. We also have a trend line, which we need to look at. Here's your trend line. Again, the support level and the trend line kind of converge right there. So I need to see a breakout higher out of this. Now it's resistance, of course. Ethereum is pretty much going to follow or should follow Bitcoin. It looks pretty similar to Bitcoin lately. So Bitcoin is a telltale sign, if it breaks out higher, that the rest of the crypto market may catch a bit of a bid as well. US oil we covered, so US oil is absolutely ripping higher, looks massively impulsive, massively bullish. I'm not looking to do anything at the moment. I'm not looking to buy or sell it. DXY, I'm kind of actually bullish on the DXY, neutral to bullish. So I'm not massively bullish. I'm not looking for trades against the US or trades with the US dollar, but if I had to give you a bias, it would be a bullish one more than a bearish one. JXY, Japanese yen, new lows. So we have gone into new lows. We broke the level from January 2025. Looks like we are retracing at the moment, retracing a little bit, but we shall see. So the yen definitely losing some value overall. I know this started to pull back, but this is definitely not an intervention. You will spot an intervention because you'll get a candle like this. We can go back to 2024. This is the candle you want to see. So that's kind of the intervention candle. Massive selling, in just a couple of minutes, maybe a couple of hours, but a massive, massive rejection. Okay, so time for the comments. I still have 4 minutes from my segment. Let's see the comments. Let's see. Marco, do you have any 50K or 100K accounts? No, unfortunately, it's only 10K and 25K. US 30, USD CAD. Marco always bribing us to watch the stream. Yeah, that's the whole point. Can you analyze USD CAD? USD CAD, sure. So let's take a look. USD gaining some strength. CAD, I'm not that sure about. I've been closely watching the CAD. I've been looking at a possible CAD recovery. So CAD right now, more data is coming bullish than neutral or bearish, but I'm still not convinced. If you look at some more long-term data, if you look at some trends, I can show you that. So if you look at the GDP and we go to the CAD, negative GDP overall picture does not look amazing. It looks pretty bearish if you ask me. Then we look at the CPI inflation. Inflation is fine. It's around the 2% target, definitely not as high as, let's say, in the UK or in the States. So inflation is fine. I wouldn't say that inflation is a problem. Now, as far as the unemployment rate goes, let's see. Unemployment rate pretty high, 6.8%. I would say that is problematic. If you go back 3 years, it's on an uptrend. So the unemployment is absolutely rising. That's not a good sign. And if you want one thing to be higher than expected, you want, for currency trading, you want that to be inflation. So if inflation was elevated, then maybe the Bank of Canada would need to hike interest rates to battle inflation, which should be bullish for the CAD, right? But even inflation is on the target. So that makes me a bit hesitant to buy the CAD, because they do have some ammo, I would say, to cut rates, maybe have the inflation go higher than 2.2%, maybe to 2.5, 2.7, but at least help the unemployment and, of course, help the GDP, which has not been doing great lately. So CAD is not on my radar at the moment. I think it's not such a great currency, and I'm being patient. Euro Swiss. Okay, Euro Swiss, and that's going to be the last one for today. Let's take a look. Euro Swiss. It looks flat on the daily chart. Edge Finder. Let's take a look at the Edge Finder top setups. Euro Swiss. Very bullish reading, so that's great. I would say, because of the technical analysis, because of the price action, I don't like the Euro Swiss. CHF. I do prefer the dollar Swiss. I think the dollar Swiss could actually be a good play. I know Alan is in USD Swiss from these lows. I know he's collecting some positive swaps. So I would say that this could be a bit of a better position. Of course, not maybe at this price, but if we go back to the support level, then I think it's game on. I think that's a pretty good position to have. There is a lack of narrative right now in Forex. A lot of the central banks are pausing, or just pausing, not really announcing will they hike or cut or even do anything. So it's a bit tough to trade Forex at the moment. That's it from my segment. I'll be streaming on Friday again, and I'll be giving away another DNA funded challenge. So make sure you tune in. I think Forex James is coming on after me. So thank you very much for watching, and I wish you good luck in the markets. Let's see if we get that BOJ intervention. So see you. Goodbye.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about. Thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello. Happy Wednesday. Hope you're all doing well. Hope you all had a good week so far. So there's not that much still on my watch list. As Marco said, it's a little bit tricky to really find a good directional longer term play like a swing trade, which is why I don't really have anything going on. So the Aussie New Zealand is still seeming quite attractive with the slightly hawkish RBA, and we do have the Reserve Bank of New Zealand that is pretty flat. There's not really much going on there. There's not a huge dovish narrative. There's not anything hawkish. So that would lead me to be quite happy to be a buyer if we can see Aussie New Zealand come back into around 11. What level is that? 11,545, which would be the 50% retracement from the previous low to the current high. That's pretty much all there is on the Aussie New Zealand. So let's have a quick scan because there was the pound Australian, which is here. I quite like the idea of being a short seller of this one. So as I just said, the RBA is currently slightly hawkish, and as everyone should know, I'm very bearish on the UK over the long term. When I say very bearish, that's not a next week. I think the UK is going to, or the pound's going to go down, but I do have that sentiment. We are in a bearish trend as well. So I'm looking to see if we can come back into this level of resistance, retest these highs, come into the 200 moving average, and then I will be looking to sell down to around 194. We've also got the Aussie New Zealand, sorry, not the Aussie New Zealand, the pound Australian on the Edge Finder here with a bearish reading, which I will pull up now. Sluggy, hello. Trade like a tiger, hello. Can I explain the VWAP? I need a bit more context. What do you mean explain the VWAP in what way? Joshua, I'm doing well. How are you? Bashi, good to see you as well. And Chris, hello. The euro is getting pretty strong economic signals, but my God, the technicals are rubbish. Yeah, that's what I mean. I just can't find anything at all. I mean, like I said, there's a couple of ideas like pound Australian, Aussie New Zealand, but there's just nothing that I can actually execute yet. So we do have slightly bullish seasonality, not a huge deal in my opinion. Retail traders are majority short. Again, it's not really swaying enough in either direction to really matter to me. COT is getting a flat reading as well, or a neutral reading. Overall, we are seeing bearish pressure here, which is a mix of the trend, services, PMI, retail sales, and interest rates. I would expect the Bank of England to continue cutting rates maybe another once or twice in 2026. Could be more, but I don't want to bet on that too heavily just yet before I have a little bit more economics to work off. So let's have a look. Chris is talking about the euro, so let's take a look at the euro's heat map here. So yes, we are seeing a nice reading of 66.67%. GDP came out to 0.3. Why is this red? Interesting. I'm not sure if that's a bug or it's supposed to be red. Anyway, it came out at 0.3. Forecast was 0.2. So overshoot on GDP, which is obviously a bullish sign. PMIs across the board, manufacturing and services underperformed. Yes, underperformed. Retail sales came out at 0.1. Came out at 0.2, which is 0.1 deviation. Overall, yes, the euro seems relatively good, but let's check the real yield heat map on the euro, because this is where paying attention to some more context comes in handy. We are getting a bearish reading. Now, I'm not going to, maybe Nick's explain this all to you. I'm not sure. I'm certainly will have done though. But essentially, just to simplify it, real yield heat map, we would use that more for a long-term gauge of direction or bias, whereas the top setups and the economic heat maps are more short-term, more actionable right now. So what I would be paying attention to again is the discrepancy that we have with the euro. Obviously, like I said, we've got that bullish rating on the economic heat map, but on the real yield heat map is getting bearish. So just keep that in mind. If you are looking for euro plays, I wouldn't be looking to hold euro longs for a long-term trade. Silver is insane. It is. I don't like to look at silver because I fumbled the bag big time. I was so proud of myself on my exit. So I got out of my silver longs here. I was buying all of this move, and we had this market gap and this big bearish candle. I was sat feeling so smug, so smart, and I have fumbled. It's fine. It's one of those things. I think we'll likely have a pullback at some point. Market dynamics, we will likely have a pullback. But what I'm more annoyed about is the $100 target. I've had the target of $100 for quite a while, pretty much since silver was back at 40s, 50s. However, I was thinking it might take, maybe another 6 months, another year, maybe a bit longer to reach 100, but we're approaching it very, very quickly. Bearing in mind, silver's now at 91. So yeah, I've definitely shot myself in the foot thinking that I was really smart, and turns out I definitely am not. You've asked me that question 3 times, and I already answered you. I need a bit more context. What do you want me to explain exactly? 4 times now you've asked me the same question. Well, do you want me to sit here and explain the whole strategy? Do you want me to explain what the VWAP stands for? Like, what is it you want me to explain? Because I'm not going to explain the strategy. I made a 40-minute video yesterday on it. I'm not going to sit here and repeat myself. If you want to know more, go and watch the video. Sluggy, I'm in the DAX. No, I'm not. So I'm still in my pound Swiss position. I'm not going to go over to the open positions just because I've got some new ones on some stocks I don't really want to make public just yet. But I've got a position still on pound Swiss, short, exactly the same as what I've been showing you over the past couple of weeks, but that's it. And obviously some small stock positions that were called by my teammate, talking like I'm in Call of Duty, by my trader, Elite Traders. You did well, James. Thank you, Matt. I appreciate the condolences, I guess. Timed it well. Yeah, the thing is, I'll be honest, it was a little bit of how do I explain it? It was an exit based on fear, but it was in my opinion, a reasonable fear. It was like what we've had many times in history. You see social media pipe up, everyone's talking about one asset and then it dumps. I think Nick covered it. I think someone sold a lot of Bitcoin to buy a massive amounts of silver or something. It's like all of that narrative to me was just a get out signal. But that's all it was. It wasn't a rule-based signal necessarily. So you could look at it from 2 aspects. Was it an exit based on fear and emotion, or was it a smart exit? Really depends on your perspective of really how you want to look at trading. But anyway, the trade's done. It is what it is. And I made money on it, which is the main thing. Aizen, I get it. I know what you're talking about. What I'm saying, I've already got a video, a 40-minute video explaining what it is, what it stands for, why it works, how I trade it. Please go and watch it, because I can't explain it in just sat here on stream. I was trying to tell Marco 100. Trying to tell Marco 100 was the target. Oh, right. Okay, I get it. Was the target, but he took a short and had to take the loss. And silver. Interesting. Yeah, I mean, I get it, because it's one of the it's one of these moves that seems very, very euphoric. So if you look at and I don't subscribe to this too much, but it does hold some weight. But I don't think it's weight enough to trade off for me. But the way the markets move, it's sort of a typical thing. You have, what is it, like the euphoria, doubt, disbelief, all of that type of thing. And it's all like sort of this, and then you get euphoria is like right at the top. I get the feeling that we're having a bit of euphoria. However, I could have said the same thing about gold 2 or 3 years ago, and look at where we are now. So do you get what I'm saying? Aizen is trolling. I don't know. Either way, it's not a great troll, but Aizen, I'm not trying to be rude, by the way. I've made a very, very long, detailed video on it. So I would rather you go and watch that, so at least you get proper answers. Because again, if I'm doing it here, I'm not going to be able to go into it in detail, and I don't want you to misunderstand something I say. My YouTube, just type in Forex James, it will come up. I've got a 1-hour video on trading in general, and I've just again put out a 40-minute scalping strategy video yesterday, which in my opinion are both great videos. In terms of the value, the editing and stuff is quite low quality, but there you go. Gold is euphoric most of the time. That is great. Yeah, that is very true. Very true, Joshua. So the S&P is interesting. So what I'm looking at, I don't know why those lines are there. Let me just get rid of those. So the S&P, I would love to be a buyer. There's, pretty much like 99% of me that would love to see a crash. And when I say a crash, I'm not actually talking about like an actual crash of like 20, 30, 40%, but I would love to see it just start retesting some of these lows, pull back to 200, just some sort of reasonable downside, because I just want to buy it. I want to buy and hold for the rest of the year. Now, what I was looking at the other day was, if I can find it, the seasonality scanners month to month on the S&P. So I like the sell in May and go away. So that's sort of a narrative that I was taught when I was learning to trade, specifically about the stocks and equities market. The equities and indices market. Sort of May period, you can expect those markets to at least soften a little bit. However, that's actually not the narrative the Edge Finder has. It's pretty much the opposite. The Edge Finder is, and again, don't take this literally, I'm not telling you to buy, but it's basically saying that March, you would want to start buying the S&P, hold it through to July, possibly sell in August, sell in September, and then buy back in October, and hold it through November. So it's interesting because, again, that's going against my, or the way that I sort of view it on a seasonal basis. So I'm just sort of planning and considering at the minute, how am I going to get into the S&P? Because if we zoom out, there is absolutely no chance I'm going to be the guy that's sat buying it here. Now, it's always this thing. I could be sat here in a month's time and the S&P is up here and I should have bought here. But right now, as things stand, I just can't really justify being a buyer right now. I would need to at least see it come back down to these lows. The fundamentals behind silver are so strong. Industrial, precious metals, both are pushing it. Yeah, I mean, I think there's been a lot of misinformation about silver, but also slightly true. So, for example, there's lots of discussion about how paper silver and physical silver, there's such a big difference in price. Obviously, there can't be that much of a difference due to sort of arbitrage opportunities and things, but they're not a one-to-one market. So just because physical silver might be, I don't know, let's say $120, it doesn't mean that spot silver or paper silver is going to $120 as well. Again, it completely could, but I'm just saying that isn't the dynamic that we have. But the fundamentals absolutely are there. I think we do still have pressure on the dollar. Actually, I forgot to mention, I do still have a position on the dollar. Completely forgot about that because it's so small. 11 cents or 11 pence for my UK people. But yeah, that's pretty much it. But yeah, what I was saying was there's still lots of pessimism around the dollar. I think we are still expecting rate cuts. I mean, the CME FedWatch tool right now, I think it's, last time I checked, it was like 95% chance or probability of a rate hold in the next decision. But overall, I think we are still looking at a dovish Fed on sort of a longer term basis, not just the next meeting. which is obviously helping the metals as well. 97 is increased, and 97. Wow. Okay, so I think gold is probably a bit more likely to give an entry than silver. I suppose I can get rid of this now. Let me clean up the chart a bit. So I don't think there's really anything to go over in gold. It's a very, very simple price action setup at the minute. We've got the previous high, previous all-time high here on gold, break right here. So looking for this retest and basically just continuation, keeping it, again, very, very basic, straightforward. Whereas silver, the price action just isn't really tradable in my opinion. Best case with gold is that we actually come back down, retest this level, and then we could get into some longs. But I think that might be a bit optimistic to look for. So yeah, first call would be at 45.50, and this would be the idea. But yeah, other than that, we've got Aussie, New Zealand, we've got gold, pound Australian. Yeah, there's not much else I'm overly interested in. We do have euro pound that's still getting a bullish reading. So let's take a look at that one on the Edge Finder. Let me just make sure that's right. Macro only. Yeah, so euro pound, euro New Zealand, New Zealand dollar is what I meant. Not really a huge fan of that one. So let's take a look. Get rid of all of this. There we go. Interesting. So euro pound, let's see what we could potentially look for, how we could potentially look for a trade. We've got a level through here. It's nothing overly interesting. It doesn't line up perfectly. This is an option. So I think buying here, basically just buying the support, could work. However, what would deter me from that idea is the fact that if we ended up coming down to the support, means that we've failed to hold above our 200. And to me, the 200 is a really nice way to just determine, is a trend holding, is it healthy, or is it not? So if we end up coming back down to here, to me, that is now a broken trend that I don't want to be involved with. So I would really have to wait for a situation like this. So if we come down to the support, we reject, and then we establish a new, fresh bullish trend, then I could look to buy on that trend change. But yeah, again, it feels, I don't know how to explain it. It feels a bit flimsy, you know? It's like when you get something off Temu and it just feels a bit, loose and light, not very stable. This is what the trade feels like. Can you help me feel better about my euro pound buy swing position, James? Yes, you know what, Chris, I absolutely can. I did exactly the same thing. So I bought euro pound, I think it was start of December. I held it all the way through until I think it was like 2nd, 3rd of January, and it was stopped out. So I'm fairly sure I bought the low here. This was a 50% retracement on this move. So I bought here, moved initially in profit, and I was like, yes, easy, cool. We'll hold it through Christmas, New Year, we can close in profit. And then stopped very, very quickly. Well, not very quickly, actually. It was not the best way to start the new year. So yeah, I hope that makes you feel a bit better, because I did the same thing. Euro Swiss, to me, again, very flimsy trade idea. I'm not really a fan of it. I just don't think there's enough juice behind it. So I was considering this idea, which actually I'm glad I didn't do now. But I was looking for the break, which we did get, and this retest. So there is the potential here, if you are bullish and you like the idea. So we could maybe see this. Is this daily or H4? This H4 candle reject this level of previous resistance, also reject this 200 moving average and close back above. That would be a really, really nice break and retest. That would be very clean, because again, we would have cleared the previous level of structure, and we would have cleared the 200 moving average, giving us sort of two confluences, and then looking for one of these two highs to get tapped into for a take profit. However, I just don't like this at all. The fact that we have come up to this level, we've broken and failed massively to go any higher, to me is a big red flag. And now look at this H4 candle. It's just very aggressive to the downside. And again, we've got that 200 moving average that is getting reclaimed. So again, it's just that sort of how healthy is the trend. In this case, there isn't really anything going on. But to be fair, Euro-Swiss was on the edge finder, I think. Yes, so it's bullish reading here. Let's just see what the difference is. So we've got trend, seasonality, retail sentiment. So what is it? If we strip away the sentiment, we've only got a score of 6, which is still reasonable. So I think if we could get a very, very clear sign of rejection to the upside, I think that would be valid. But yeah, it's not, not great in my opinion. 10 minutes till Supreme Court. Yes, I don't know, to be honest. I guess I'll be off stream by then. This pair be hurting us both. Yeah, Chris, don't worry. I think we both made the same mistake on that one. Ian is looking for Euro Australian shorts. Interesting. Let's see. Do we have anything there here? We don't. Also, I saw someone, I think either before I came on or just as I came on, someone was talking about the yen intervention. I wouldn't be overly concerned. So I don't know how I'm going to show this actually. Just bear with me for a second. Let me do this. There you go. So this is where, sorry, Ian, I'm going to go back to your Euro Aussie idea in a second. Let me move this as well, if I can. I don't know how to get rid of that. There we go. So yeah, this shows us basically when and where the MOF has intervened. So it's happened once here in 2022, twice here in 2022, 2023, 2024. And now we are approaching, in fact, obviously this is old. This is an older picture, so I'm not sure exactly where price is right now. I think it's roughly within this zone, sort of 59.60. So I would be okay saying that price could come to 160. As soon as we breach above 160 and start going higher, then yes, I will be a bit fearful of that. Because if you notice and again, this is purely my interpretation, they're not intervening on these sort of double top levels. So if it was a case of just a fixed price level, they would have intervened here. They would have intervened again here and again here. But they didn't. They waited till here. Then they waited till 160. Are they going to wait till 165, 170? I don't know. We'll see. Again, don't take that too literally. It's more just what I've noticed. But anyway, let's get back to it. Just one second. I need to move my windows back again so I can see the chat. So how much time have we got? 5 minutes. And Ian's looking at Euro Aussie. Let's take a look. Here. So what are you looking at? Shorts. Oh, you know what? Maybe I'll have to add this to my list. I'm fairly sure Ian is a guy in my Discord server, which actually makes a lot of sense because I know exactly what he's looking at here. I can almost bet he's looking at something like this, which is just very basic trend following, looking for the reasonable pullback into the trend. Obviously, like I said earlier, we've got neutral to hawkish RBA, and the ECB is pretty flat in terms of their dovish hawkish neutral. They're pretty neutral, in my opinion. So yeah, this is looking very, very solid. I would be actually really tempted to just execute short here. Let's see, what would the fib be? Fib retracement from high to low. Yeah, so it's a little bit off. Oh God, I deleted it. Hold on, let me redraw that. Here, yeah, there we go. So I'd be looking, ideally, I wouldn't want to sell right here, because I think we could very likely see it come up towards the 61.8 level, then continue lower. This just feels a little bit like a trap, just not a great feeling about this level, but I like the idea. So I'm going to leave that on my list, actually. Can we do gold? We already did gold, actually. I'm got 5 minutes left, so if there's nothing else, yes, I can do gold again. What's going on with stocks? They're all down. Yeah, we had some news that... what was it? NVIDIA's chips aren't allowed in China. I'm not sure exactly what the headline was, but there was some sort of debacle about that. We saw NASDAQ take a hit as well. And we did have some news come out for the US, which I actually wasn't paying attention to today, which is my mistake. Let me just take a quick look. What was it? So today we had inflation. We had retail sales as well. PPI. We had a lot of news, actually. So PPI came in at PPI final demand year on year came in at 3%, slightly higher. So slightly higher inflation across the board, I would say in general, but nothing overly dramatic. But yeah, I think overall we're just seeing a little bit of pressure on the equities and indices markets. But I would personally say that's largely driven by stock related data. But again, I'm not 100% sure. I'm not a stock guy, unfortunately. Alan's on after me, is he? That's good. I can pass you off to Alan, fantastic trader. What were we saying? Oh, gold, that was it. Okay, I'll recap gold and then I will call it a day and let Alan come and take over in 3 minutes. So gold is a very, very simple buy, to be honest with you. Not a signal, don't buy it right now just because I said that. However, I think gold is very basic. I don't think you really need to overthink it. If you can look at the trend, that's all you need to do. I mean, if we just zoom out, how could you really justify being a seller unless you are a mean reversion trader? And even in that case, good luck to you because you're a braver man than I am. How do I fix that? Oh no, my chart's gone. There we go. So yeah, all I would be looking for is just a continuation to the upside. So I would really like to see the retest of this level because we've already broken above, retest this previous high, and then just continue higher. Very, very simple, very basic. Again, it's one of the markets you can't really overanalyze it. I made that mistake last year of overthinking, overanalyzing gold, and every single time it cost me money because it just didn't happen. Gold was basically just doing this type of thing. So it just come down to the 50 moving average and just continue higher. 50 moving average, continue higher. I was looking at, fib levels, pull back to the 200 moving average, mean reversions, blah, blah, blah. Missed everything. I missed every single opportunity on gold last year because I was being too hesitant. I'm not going to make that mistake again. So I think the compromise to that is actually just waiting and then using lower risk. I'm not sure what gold is on the Edge Finder, actually. Let's see. It's actually not that high, score of 6. But to be honest, it doesn't matter. I think gold is still a very obvious buy. Euro yen makes sense. So what else do we have on the bearish list? Let me just keep an eye on the time. Pound Aussie is pretty much it on the setups, but let's have a look at macro. What do we have here? Pound yen, pound CAD, that's Swiss yen. So pound yen, pound CAD, Swiss yen, pound New Zealand, dollar yen. I would not short dollar yen personally. I think that's a little bit a death trap for now anyway. Pound New Zealand. I don't see an opportunity there for the way I trade. I like to rely on a lot of central bank divergence and things like that. I don't really see that with pound New Zealand, but let's see if we could maybe get a short-term position. So I think we could maybe even just sell resistance, to be perfectly honest with you. So if you've got your own research and you have a reason to be short pound New Zealand, I actually don't think this is a bad level. Stop loss would either need to be quite tight here or quite large above this wick, I would say. And you could maybe just target these lows down here. But again, not for me. But if that's your cup of tea, then there's an idea for you. Guys, I am going to head off. I'm going to hand you over to the handsome Alan. And yeah, that's it from me. Have a great. James is kicking out now. Yeah, exactly. I'm getting removed. The bouncers came. Guys, have a good one. Stay safe. Don't get margin called, and I will see you all tomorrow.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, how you doing, Aizen? How you doing? How you doing, Bashi, hermano? ¿Cómo estamos? So we do have the Supreme Court opinion coming in here, supposedly at 9 o'clock. It's 9:01. So I'm gonna have this on standby. In fact, I'm gonna have this on my other monitor. And if I see anything out of the ordinary worth mentioning, then I will definitely go ahead and pull this up on the big screen and update you guys here. But as far as this morning goes, we didn't have much going on. Most of the data points that we were expecting today were pretty much in line, so nothing too crazy. I think that took a backseat, and markets are mostly focused on what's going on with the Supreme Court tariffs. Personally, I don't know what's gonna happen, what the outcome is gonna be, regardless of like what happens moving forward. Because you have the idea that Trump will retaliate, which is the likely scenario, but then you have Secretary Bessent saying that we can make up for it, whatever the case may be. So it's most of the thing. What I'm going to be focusing on is just trying to understand what the market thinks of it. That when you don't know what certain things mean following a news release, the best approach, in my opinion, is to just see what markets reacted as. What's the net outcome? Markets will tell you if it's good or bad, and then you move from there. So that's kind of what I'm thinking at for what's going on here. So let me pull this up again. Let me see. I want to have it so I can read the chat, but I can also read the news flow. So give me a sec, guys. I'm gonna do this. This should work here. You know what? I'm just gonna do this. We're gonna be creative today. I'm gonna do this, and then trading view is gonna be right here. Perfect. All right. So yeah, we'll have the news flow here on the sidelines, and then we will see what happens if anything interesting pops up. So we'll do that. Okay, cool. As far as markets go, it seems like they're setting up here. So we have the S&P here starting the day red. NASDAQ is leading. Now, the NASDAQ has been showing some relative weakness going against the other major indexes. And I think that's because we're having some kind of a rotation going into the other markets. So we are getting more broad strength, which is actually really, really good in my opinion. 2025, most of 2025 heading into the end there, you had tech leading the whole way through. And that makes the market really sensitive, because if tech is carrying all the weight and then something disrupts tech, then tech will also lead everyone to the downside, right? So now that everyone's getting a more even piece of the pie, markets getting held up more evenly distributed, I think that's a good thing. So NASDAQ is kind of here showing that relative weakness. So if we do get a broader sell-off, I would imagine that this thing goes and sells off even further. Nothing I see here yet on the news flow, so I'm going to keep that. As far as currency setups that I'm looking for, let's see what's up, Bashy. Let's see the chat. Hey, Tiger, I really liked your segment. I actually watched some of it. I enjoyed it. Good to see another Edge Finder user. And seeing the perspective from other people and how they use it. Everyone uses it differently, so that's pretty cool. Dollar yen here is pulling back, so we did have a pop here. The big thing about the dollar yen is the intervention risk, right? As soon as you get into the 160s territory, I was doing some research, and actually yesterday on the Telegram channel, I did make a chart post here about the dollar yen and the possible interventions. I will say, if you guys are not in the Telegram channel, definitely feel free to join. It's completely free. I would love to have you in there. I post chart markups, and there's also bonus content as well, promotions too. So if you're in the prop firm looking area and you're looking for firms and things like that, we do offer discount codes in there. So lots of resources for your benefit, completely free. And at the end of every single market day, I put a little quiz in there to keep you guys sharp. Some are easy, some are hard. And sometimes I make them extremely tricky as far as the answers go. So I'd definitely be on the lookout there. But I did say on the Telegram channel, one of my analysis for yesterday was the Bank of Japan and the dollar yen and the implications and what the intervention might look like. A lot of people do have certain levels in mind, myself included, right? So levels that you would be cautioned in is like the 159s, 160s. Once you get into 162, then you're really like, at a high risk there. However, the Bank of Japan didn't say that there's any levels in mind. They're more focused on the speediness of depreciation in the yen. So if you do start to see a very, very fast moving dollar yen chart to the upside, then that's where the likelihood of that intervention comes in. So definitely keep a mind on that there. So there's no really level in mind. So we'll kind of see how that plays out there. Going back to the news flow here, nothing interesting. Okay, cool. So to make sure I get you guys covered in case something does pop up. And you can use the stream feature on Financial Juice just so you can use the stream feature on Financial so you can hear the news update. The squawk. Yeah, it gets really loud though. But yeah, you're absolutely right. Another thing here, one of the setups that I'm looking for. So if we do continue to see that broader dollar strength here, then Aussie dollar will start looking to look attractive for me, and perhaps I can start participating here. So we've been hanging out at this level of support. This has been a level of support here now in the recent times, right? But in my opinion, it's still a premium. I would love to wait for a deeper pullback if we do get that up into that 50% retracement level at that 600 level. However, if we never get it and this becomes a more solidified level, then I would just have to accept that this is the newer, fresher level to play off of, and then I will get a buy enter here. But I'm thinking that dollar index does have a little bit more room to go as far as to the upside, and I can be patient. So I'll wait for ultimately that 50% retracement level. This is a fantastic level. This was level of resistance before. If we just look left here, we rejected it. We broke above it, and whenever we retested, that's when it turned into a level of support here. So just waiting on that there as well. As far as DXY goes, we are just kind of hanging out at the 50% retracement level when it comes to that Fibonacci level. So I'm this recent leg lower. This is kind of what I like to do when I'm trading, is put myself in the position of the other person. So at the moment, when I was going long dollar Swiss, I was looking at how deep can the dollar index go before it starts turning bearish. And so putting that Fibonacci from that low to the high, this is in my perspective, right? This is from the eyes of a dollar bull. We got it to the 61.8% retracement level, and then we started shooting higher, right? So then my question then goes, where do I have to be cautious? Where will profit taking go, et cetera, et cetera? So then I know that, okay, my level here to buy is 61.8% retracement, right? If I go ahead and flip my position, now if I'm a dollar bear, then my Fibonacci will look something like this, right? From that low, or from the high to the low. And then these are the pullback levels that dollar bears are considering. You have the 38.2, the 50, and the 61.8 there. So at the moment, we are at the 50% retracement level. However, we still have some room to go at that 61.8 there. So if we get up there, that's where I start being like, okay, the dollar bears have an opportunity here to really send this thing lower. I need to be cautious once we get up here. Perhaps this is a profit-taking opportunity. Now, if we just blow past the 61.8% retracement level, then most likely the dollar index does find its way back to the top end of this channel here at the 105, 106 area. And this is just a level of support that has been the case for some time here. So if you look left, 1, 2, 3, 4, potentially 5 if we do get up there. So that's kind of how I trade currencies. Addressing both sides of the coin is very important for me. That way, I'm not caught out of the blue when market starts turning and I'm like, what the heck's going on? So yeah. Off-main dollar is looking good. Yeah, man, I'm glad I hold on to it. So I'm collecting positive swaps on that, and it is starting to turn around as well. One thing I am cautious about here, so similar idea, right? If I'm a dollar Swiss bear, where am I looking to short this thing? This is that 200-day moving average here in yellow here. So this is where I have my alert. So I have an alert right here. If we get there, market starts to stall out, or we start to have a very noticeable pivot to the downside, then I know that this was profit taking. This is now a trade for the bears. So yeah, but like you said, good trade. Entered here, could have entered even lower here, but I just didn't like how we were stalling. But I've been in this trade now for a little over a month, so I've been collecting some positive swaps, which has been nice. So collecting some income there, some slight income, right? It's not like I was making killing, but made some income in the slower months of December. Now things are starting to pick up here. Dollar index is starting to catch a bid. So we'll see if this thing continues. If this thing does blow past that 200-day moving average, then I just trade it higher, perhaps the top of this range, similar to that dollar index, right? What happens to the dollar index if we pass that 61.8? Then most likely we go to that top of that range there. So that'll be a target for myself there. Now, once we get there, it's just a matter of, is this thing going to turn around like it has in the past, or does the fundamental picture, the backdrop in there kind of shift for more longer term dollar bears? At that point, or for now, we can't project that far ahead, right? Because then we're in the business of, or we get into that territory of starting to predict markets, and that's not what we do, but we react to them. So for now, that's just how I'm monitoring that. Just in Bashi said, USA Department pauses visa process for 75 countries starting January 1st. Okay. I don't think that's related to no, I don't think that's related to the tariff thing, but thank you for putting that in there. I don't see anything out of the ordinary on my end here. Let me just go like this. No. Okay, cool. But yeah, that's kind of what I'm looking at here for dollar Swiss, and you know how I'm planning to manage it as well. Now, when it comes to participating in dollar bearishness, if we do start to get that pivot point, then I would definitely like to participate by going Aussie dollar long. That's going to be my main trade there. That's the one I'm very hopeful for getting into. It's just been Aussie dollar has been doing pretty well as fundamentals go, and the projected interest rates and all that good stuff. If we were to go down to let's go ahead and look at eco surprise meter. It's actually gonna be over here. Let's see. Aussie dollar has been doing well. Dollar 45%. It was a little bit weaker. Pound dollar has been doing bad lately as well. Let's go ahead and look at pound Aussie. I know that's a trade that everyone or most of the A1 trading community members have been participating in. So it's good to see that. Yeah, man, this thing's going down to the lows. If I'm looking at this with a fresh pair of eyes, just looking at something like this, this catches my attention. Yeah, we can stress this further. Let's see. I mean, yeah, you guys are definitely on the right side of that trade. So Edgefinder was signaling pound Aussie bearishness. I wonder if the score is still intact as well. And for those that don't know, these meters that you see here are really, really good for your intraday people or lower time frame people as well. So if you're not a swing trader like myself or a position trader, this will definitely be to your benefit. So definitely consider checking this one out here. But let's look at the top setups and see if pound Aussie is still at the bottom of that list. Yeah, it's the one at the very bottom, -7. I know it was like -10 or something crazy like that. So that's good to see. So if I were to continue participating in this, we're actually approaching that 50-day moving average there. So if I'm putting a level, something like this, maybe short it from there. But yeah, awesome trade. Awesome trade. Yeah, Bashi is faster than Forex Factory. Am I Filipino? That's funny. No, I'm not Filipino. I'm actually Mexican and Salvadorian. So I'm mixed. But my dad looks Filipino, and everyone tells him that he's Filipino, and he's more lighter complected than myself. So that's funny that you say that. No, I'm not Filipino. Can you look at pound dollar? Yeah, of course. So as we saw before, here I'll go back to it just so you guys can see it. Pound has been getting very, very bad readings as far as their data goes. So this just means that 0% of their data points that they have released in the past have beat expectations. They've all missed. So pound is not doing the best. The Bank of England does have I believe 1 to 2 rate cuts in their toolbox there for this year. So this is what I would look for in the pound if I was not in trade. Fresh pair of eyes. Let me just delete everything for you guys. I'm going to take away these moving averages, delete this alert. If the theme continues for some shorter dollar strength or for more dollar strength, weaker pound, then I would actually be looking for, if I go down to the 4, I don't know, nothing too crazy really. Like maybe if we find our way back here, right? Short it from there and then target. If if momentum is still there, this will be one level, and then you have, um, let's see. Maybe something like this. That would be like potential targets. But ideally, what I would do, and this is the simpler way to go about it, if you're looking to short pound, right, you get your entry, and then you put yourself in the perspective of a long-term bull, and that will be your exit opportunity. So that 38.2% retracement level lines up right here. Here, I'll delete this for you. So these will be my my take profit levels if I were short the pound, right? 38.2% retracement level, the 50, and the 61.8. So these are levels that bulls can go ahead and step in and take over. And that's where you have to be mindful of. Usually I target for like that golden zone. So something like this, right? Anywhere from the 50 to the 61.8. But, things can start turning around at 38.2. So I wouldn't, take that off the table as well. So I would short from there and then target this 38.2% retracement. That's the easiest way I would go about it. And then obviously making sure that the fundamentals are in line with that. So it's as simple as going into the top setups. Go to top setups here. And then we'll do majors only. And then we see pound dollars getting a neutral reading. So not the best score in the world. If we go down to the macro, that would be probably better to look at. Majors only, -1 score. So it's not like extremely bearish. So perhaps you do find yourself up there at that level and you can start shorting, but then you have to be mindful of the fundamentals and things that are going on there. Do you trade for a living? Yes, I this is primarily what I do, and also have other income as well. So it definitely helps a little bit, keeping things steady there. But yeah, this is what I do. I used to work at a big bank, and then I decided to go trading independently. Can you check pound dollar? Yep. So this was the analysis I just did, my friend. So this is the pound dollar chart here. Basically, short if you get a little bit of a pop, and then as far as take profit level go, if you are shorting it, then look at the 38.2, the 50, or the 61.8. Pound is sticky at the moment. Tough times ahead. Yeah, I do know that they have some things going on with their budget and how things are going to go fiscally, right? So that's the thing that's up in the air with pound. Is how they're going to spend their money. Dovish hawkish fiscal stances. That's the kind of the bigger picture thing in the UK. So, and they are struggling there with some growth. Financial Juice reported that Supreme Court doesn't rule today. I can double check for that. There you go. I can see it right here. Let me pull up Epic Pen. Epic Pen. Yo, my Epic Pen has not been working lately, man. Come on. Anyway, it's right here. I'll highlight it with my little highlighter here. Supreme Court does not rule on Trump tariffs today. Definitely appreciate that, my friend, for giving us that update. So I'll go ahead and take that away. So it seems like markets are going to continue. Let's see what's going on with the indexes. They are catching slightly a bid there. So if we go down to the 1 hour, you can see what things are looking like. So there you go. S&P is kind of recovering there. NASDAQ, US 30, but we'll see what really goes on. You wanted me to check gold there. Yeah, gold's probably still elevated. Remember, we still have some unironed things going on with Venezuelan escalations, and now we have Iran in the picture as well. So definitely a fundamental backdrop supportive for gold. Also have to consider that rate cuts are on the table for the US. You have 2 in 2026, potentially 3. I actually did see something in Financial Juice this morning. Someone did say that 3 is on the table as well. So maybe the markets are starting to price that in there. But yeah, all the stuff is really, really good supportive for gold. If you just look at the Edge Finder and you look at the data scanners, we'll go here, data scanners for gold and silver. Go to gold. still bullish reading, right? So there's a lot of things in favor for gold. Anything uncertain, all that good stuff, geopolitics is very, very good for gold. Silver as well. Obviously, we are at the 91 handle. So perhaps we do find our way up at the 100 handle. That's just a crazy run up for silver. Congratulations to everyone that, or anyone who did participate in that. That's amazing. Sorry, Mr. Chat, no worries. Another thing to be mindful of is oil here. We did get a pop. Let's see, why do I have this there? That's why. I have an alert here at the 200-day moving average. So we'll see if we get a continuation to the upside there, or if this thing starts to fade off. Oil can become tricky for the whole rate cut narrative in the US if it stays elevated for an extended period of time. So if we start to really start trickling up here and it stays up there for some time, then of course that can trickle into the US economy and have a little bit of short-term inflationary pressures. Perhaps that gives the Fed some room to go ahead and hold rates there. And obviously that will support the dollar and a little bit hinder equities very slightly. So we'll see how that plays out. Remember, higher oil costs, when you look at the US, a lot of goods and services are transported by truck. So if there's high gas prices, things like that, that's going to get passed on to us, and so that's going to give you those short-term inflationary pressures. So that's the thing with oil that you have to be mindful of. Interesting chart. I mean, oil has been relatively cheap for some time now, so it's just a matter of if it stays elevated for too long, then of course that'll cause some implications. I've been buying silver since $23. Nice, man. Awesome. Good for you. That's awesome. Let's see, another chart we can look for. Any other chart requests that you guys would like to see, please feel free to let me know. If we do get that dollar bearishness, I'll just go off of my setups here that I'm looking at, my future trades. I'm looking to go short dollar CAD if we do get the right setup. If all stars do align, I'd be very happy to participate in this trade. This was a level here that I wanted to see, but remember, in my previous live stream, I did say that I was going to hesitate here just because I didn't know if we had some more dollar strength in us. And if we did, then of course I'd be more patient and wait for something like the 1.4200 level. If we get up there, then in my opinion, that's a great premium to short from. If we just put a fib from low to high, this would be that 50% retracement level. So something I'm waiting for. If the setup does come, I'll be more than happy to participate. I think it's going to be a good risk reward. I could potentially target right here. And if I do that, if we just go ahead and put a short position hypothetical short there, we can put a stop above this level here, about 400 pips out. And then you short it here. That's a 1 to 6, maybe not the best. But if the trade does start moving into my favor, then of course I will move my stop along the way, and then the risk to reward ratio improves from there. So that's how I would approach dollar CAD. Definitely a chart that I'm going to have there. And then I have this alarm here. So if the alarm does get hit here and we just blow up from there, then I'd be actually really excited to go ahead and start shorting it from these higher levels. Can you look at New Zealand dollar? So New Zealand dollar has been the weaker one of the two when you're comparing Aussie dollar and New Zealand dollar. New Zealand dollar is not looking to hike rates. I think they're kind of where they're at, and so that's why you kind of saw that there. But one thing about Aussie and New Zealand to be mindful of, who was the gentleman that asked me for that? Oh, Kierdo, if I'm pronouncing that correctly. New Zealand and Aussie are risk-on currencies. So when there's risk-on environments going on at play, they tend to thrive. Anything that benefits China also lifts off the New Zealand and Aussie as well. So one thing to be mindful of. And then also too, Australia is a big exporter of gold. So whenever Australian government or the Australian economy does well from gold, Aussie dollar does as well tend to benefit from that as well. But looking at setups here, longer term, I'd probably buy New Zealand dollar if we find ourselves at these lower levels here. But if I just put a fib, I'd be looking to, I mean, we already hit the 50, honestly. So the 61.8% as well, that'll be my last resort. If you don't get a hold up that 61.8% retracement level, then there's a good probability that this thing just trades lower. And that wouldn't be a bad thing necessarily. If you just look on the weekly chart here and you just look left, whenever we did find ourselves at these levels, you had some upside potential, ahead. So even if you look even here to 2020, so maybe it's good that New Zealand dollar does trade even lower here and potentially trade it to the upside. That'd be a really, really good risk to reward ratio. And then if you do, buy it here, then you can just target the moving averages that'll also follow suit with that. And that'll probably most likely leave you at this topper end of resistance. But at the moment, if there's no trades on and you're looking to participate, we're kind of just here in the middle, and I wouldn't really trade on that. Let's see. That's what I was worrying. Like sell some or just keep it all, let it ride. Okay. I don't think that was for me. So let's see what other one thing too with dollar yen that I was looking at. Although we do have intervention risk, and I'm not advising or saying you should participate, but one of the likely scenarios, in my opinion, is that this pullback right here, you have this breakout at this level. If I just go down to the 4-hour just to make it more cleaner, we had a breakout at this level of resistance. In my opinion, we are pulling back here, and so now most likely this thing could get bought into because you do have some things going on in Japan that's weakening the yen, and then it can probably trade higher here. The only thing is, if it squeezes higher really, really fast, then you are at risk of that intervention. So one thing to be mindful of for sure. Let's see if we just look at the economic heat map for Japan. Let me consolidate these. They've been actually doing pretty well. If you look at this price meter here to the bottom right, so that could actually work in favor of the yen whenever they do start to intervene. But yeah, guys, definitely the tool that I use, the tool that has made me that has made my work so much easier, right? Someone asked if I trade for a living. Yes, I do, and also what really helps with my trading is definitely the Edge Finder. Definitely get you guys a copy of it. It has changed my trading for the better. It delegates the task, right? You have to remember, especially in my world, currencies, I trade global macro. So I have to be aware of what's going on in every major economy. There's, as we all know, there's an economic calendar, and every single day there's something going on. So gathering all the data, putting it together, and then comparing it against how many hundreds of currency pairs there are out there is almost impossible to the human to do realistically. So, when I was working at my old job, I had a lot of data at my disposal. It was really easy. When I went independent, obviously that was taken away, and I had to do it by hand. And so this thing really just does what it needs to do. Really, it's not complicated. It makes it easy. And if other institutions are not doing it by hand, neither should you. So definitely get you guys a copy of the Edge Finder, and also join the Telegram channel as well. I do my best. The other team members as well put bonus content in there. I think it'd be really beneficial, especially the Telegram. If you can't afford the Edge Finder, join the Telegram. Completely free value. You would definitely become a better trader. So yep. And I think that's it for my segment, guys. So I definitely thank you guys so much for watching here. I'll be on tomorrow and Friday as well. So definitely stick around. I wish you guys all a good trading day. Like as always, trade safely, guys. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.